In this video here, we're going to look into the fundamental dynamics of a bull market and a bear market. And you have to know these as a trader and as an investor. So let's start with the basics. Markets move in cycles. They go up, they go down, they go sideways. They alternate between periods of growth and then periods of decline. A bull market is officially recognized when prices rise 20% from recent lows. A bear market is when prices fall 20% from recent highs. And this is in the market indexes, the major ones like the S&P 500. In a bull market, you're going to see three distinct patterns. You're going to see higher highs and higher lows forming an upward trend over the longer term. You might see lower lows but higher highs. It can happen. Strong buying pressure with increased trading volume in an upward direction. You'll see price action consistently staying above key moving average like the 50, the 100, and the 200. So in this example here, I want you to see how that 50-day moving average acts as support during bullish phases, but always look left when price is near any moving average. And you're no doubt going to see actual price structure, and it's not just the average. I want you to see how trend lines connect the higher lows, providing an obvious and clear visual confirmation of upward momentum. In market psychology, this plays a huge role as well. During a bull market, traders and investors, they're going to have an increased risk appetite. You're going to see some strong buying on dips, and that'll be seen through volume and momentum types of candles and breaking new highs. There's going to be optimistic outlook on news and earnings. But on the flip side of that, we have bear markets. We have lower highs and we have lower lows. We're going to see increased volatility and sharp downward moves. You're going to see price consistently trading below the major averages. You're going to see negative sentiment and increased selling pressure. And your strategy has to adapt to each of these different conditions. So in a bull market, consider buying dips at a support level. Use trailing stops to protect your profits, letting it run in the direction of the trend. Look for breakout opportunities in the trend direction because they're more likely to work in an upward moving market. And you can consider looking at longer holding periods depending on your strategy. For bear markets, focus on short positions. Easiest way to do that is go into option strategies, buying puts. Look for tighter stop losses. Look for smaller position sizing and quick profit taking. And I want you to remember these critical risk management principles. Adjust your position sizing based on market conditions. Some traders will risk a higher portion of their account in strong trends, I being one of them. Use wider stops in a trending market because you certainly don't want to get shaken out by a little volatility move to the downside takes you out, but the overall trend remains. Reduce exposure during higher volatility, and you see this a lot in range-bound markets that are whipping back and forth. And always maintain some sort of risk-reward parameters, and yes, one-to-one risk-reward can work. To wrap it up, because this is a very simple concept, we don't need to drag it on. Identify the current market conditions using technical analysis. You want to understand the psychology of the market by looking at the price and the sentiment. You want to adapt your trading strategy to match the different phases of the market. And of course, always maintain strict risk management. So when you're done with this video, I want you to take some action right now. I want you to review your current trading approach and see if it aligns with these principles we just talked about. Make sure you hit like and subscribe, and we'll talk to you soon.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.